So there does seem to be some contrast between strong economic data and retailers reporting reduced consumer spending. It makes the Fed's next moves all the more interesting. Here with more, Quincy Krosby, LPL Financial Chief, Global Strategist. Good to have you, Quincy. So as we look at this picture, what we're seeing with some of these bellwethers in a Walmart and a Home Depot then, are we not getting an understanding there, or at least markets not getting an understanding of how the consumer is really faring at the moment?
Well, exactly. I mean, the consumer's been using credit cards more and more. And remember that before the holiday sales, Walmart had said a number of times that the consumer with $100,000 in household income coming in and going and buying necessities there. We also heard that from the dollar stores. But the hope was that consumer, the upper end consumer, middle income consumer, would go down the aisles where there are more high margin items and help the bottom line. But what we're hearing now is that they're basically sticking to the necessities. And perhaps you're going to see more and more sales, which is normal in February and even in March. But the fact is, there's one other aspect for both Walmart and also Home Depot. They raised wages, and that's going to hurt because they have the higher wages for their own employees, and yet a struggle for the revenue, and that's going to put pressure on margins, and that's the concern across the spectrum for the economy and also the markets. The pressure on margins, with wages being the most important input cost for American companies.
And when you consider how tight the labor market is, that does seem to be something that's not going away anytime soon, despite what the Fed does. I mean, of course, the Fed's key inflation gauge core PCE coming out this week as well. A lot to digest on the heels of what we saw with the consumer price index and PPI as well. How would you characterize this phase? Because obviously the markets are still hoping and not really sinking in that the fact that we might see another rate hike of perhaps 25 basis points or perhaps even more than that coming up.
Well, no, absolutely. What has happened is in the futures market, we're now seeing, and we saw this last week, a third rate hike, and the market was thinking 25 basis points, the one for June. And initially coming into 2023, the futures market had seen 2 rate hikes, 25 basis points, and 2 rate cuts at the end of the year. This has shifted. And as you alluded to, the market is now, for the March meeting, taking a look and upping, mind you, it's modest, the potential for a 50 basis point rate hike. And this is why the Fed minutes are going to be extremely important this time around to see if there was a major discussion about this. Loretta Mester talked about it, and she's a non-voting member of the Fed this year, but she's the one who mentioned last week that she thought perhaps a 50 basis point rate hike for this upcoming meeting would be appropriate. This is a very important shift in the psychology. And I want to mention in the Fed funds futures market, we see 25 basis point for March 22nd coming down a bit, and then 50 basis point inching higher, albeit at a very modest rate at this point. So all of the information, Friday's PCE is going to be extremely important to help fill in the gaps in terms of where inflation is headed.
And we're also, of course, going to be getting US GDP data, initial jobless claims Thursday as well. At what point do you think we will get a sense of normalcy? At what point, when we look at especially the earnings performance, as we have I believe about 85% of companies have now at least reported for this quarter, what is the outlook here?
The outlook is murky. And the question is whether or not with the retailers, the big box retailers, whether or not we're going to see what we saw in the tech sector. In other words, cost control and maybe the laying off. We saw that with Amazon. Clearly, they had raised the wages as well for the drivers. But the question is, will Home Depot, will Lowe's, and will Walmart have to do that too? The biggest issue is, and I think this is the irony of Home Depot today and Walmart, it is indicating, I would say, especially considering the guidance, that the Fed's policy is working. And that's the irony, but there's a lag in it. And perhaps the consumer, and that's what they're worried about. They're worried about the consumer demand staying strong, staying resilient. Perhaps what we heard this morning is not so fast, that the Fed's campaign is actually helping to tackle inflationary pressures by bringing demand down.
And it is tough because you still have equities fighting the Fed, but then you have these strong underpinnings in the US economy as well. In this sort of environment, then, which sectors do you like? Are there some specific companies that you think are better positioned for this sort of volatile environment?
Well, we are looking at the industrials. They've been holding up. They've been holding up actually in the US and in Europe. A good portion of the industrials, machinery, and also the defense names. Defense and aeronautics have been doing very well, and that's a part of the industrial sector. But what we are watching for, and this is going to be a significant tell for the market and where we're headed, is do we continue to see technology lead on rallies? Are we going to continue to see consumer discretionary lead on rallies, or are we going to see a shift back to consumer staples? If that happens, it is the market telling you that the economy is slowing and that the consumer spending is also slowing. We've only seen a reversion back to consumer staples a couple of times, only to be removed and have consumer discretionary leading on a rally. We're going to watch the sectors that lead us in a rally. If the 10-year yield goes above 4%, our hunch is that staples may gain yet again.
Well, certainly some great insights there and some signals to watch for. Quincy Krosby, Chief Global Strategist at LPL Financial. Thank you for joining me this morning.